Morning, my friends. Today I will explain you the theoretical concept of bank reconciliation statement. Before I start, I would like to tell you one thing, that in accountancy, conceptual and theoretical clarity is most important, because once you are thorough with the theory and concept of any topic, then you can solve any number of sums very easily and lucidly. So today I will explain you the theoretical aspect of bank reconciliation statement. And you know the meaning of bank and statement. So I will explain you the meaning of reconciliation. To explain you the meaning of reconciliation, I would like to give you one practical example. Say for example, Mr. A and Mr. B are best friends, and both of them know Mr. C, some third person. Mr. A is having a very good, positive and very goody opinion about Mr. C, whereas Mr. B is having a negative opinion about Mr. C. Mr. A asks Mr. B that Mr. C is a very nice, thorough gentleman. Then also why you are having such a negative opinion about Mr. C? So one day, both the friends, Mr. A and Mr. B, sit together and Mr. A narrates all his experiences with Mr. C, on the basis of which he had developed his opinion, positive, goody opinion about Mr. C. And same way, Mr. B also narrates all his bitter experiences with Mr. C, on the basis of which he had developed negative opinion about Mr. C. So opinion about any person is developed on the basis of our experience, our interactions with that particular person, right? So Mr. A said that Mr. C is very cooperative. He has done my this so many works. He has always stand with me when I was in need, etc. Whereas Mr. B said, whenever I phone call him or I need his help in case of any emergency, he is always busy. He avoids to talk with me, etc. Right? So Mr. A and Mr. B sit together and they narrated their experiences with Mr. C, on the basis of which each of them had developed their opinion about Mr. C. But Mr. A did not insist at Mr. B to change his opinion, and vice versa. So both were stick to their opinion about Mr. C. But both of them sit together and they narrated their experiences with Mr. C. So this means both of them have reconciled their experience with Mr. C. Now, coming to our topic and to our subject matter, in bank reconciliation statement, two persons are, one is bank, another is account holder. Account holder is having account with bank. Bank prepares passbook or bank statement. Account holder prepares cash book or bank book. Cash book having a bank column. The bank column in which he is having a account. Bank records transactions with customers. It means transactions undertaken by the customer in that particular account. Similarly, account holder, customer, records in his cash book or bank book the transactions he has entered into with the bank. Now, in bank, so many customers are having accounts, right? And various customers, they maintain cash book or bank book. Now, at the end of the month, say for example, bank balance in passbook or bank statement is say rupees 50,000 in the account of Mr. A. Now, Mr. A has already prepared in his books of accounts cash book and bank book, in which the balance as per his cash book or bank book is 55,000 rupees. So there is a difference of rupees 5,000 in bank balance as per passbook or bank statement and bank balance as per cash book or bank. So Mr. A will see his bank statement or passbook and he will compare it with his cash book or bank book, and he will find out the reasons for difference of rupees 5,000 in balances for cash book and balances for passbook, and he will record it in his bank reconciliation statement. Now the reasons for difference in balances for cash book and passbook are so many number of reasons. One of the reasons is, so for example, on 28th of April, Mr. A has deposited a check of rupees 5,000 in his bank account. Now you know that normally it takes 2 days in the process of clearing the check with the bank. So in the cash book or bank book, the check deposited is recorded on 28th of April. Now say for example, on 29th and 30th, there is second Saturday and Sunday, that is weekly off in a bank. So obviously check will get cleared on 1st of May or 2nd of May by bank. So in passbook or bank statement, the same check will be recorded on 1st or 2nd of May, the day on which it is cleared by the bank. It means on 30th April, there is a difference of 5,000 in balances for cash book, bank book and balances for passbook or bank statement. So he will not make changes in his cash book, passbook, or bank will not make any changes in its passbook or bank statement, but Mr. A will reconcile his cash book with the passbook. This is bank reconciliation statement. Now, bank reconciliation statement is prepared only and only by account holder, not by bank, because few minutes back I told you that in bank n number, so many persons are doing their accounts. So bank is not interested that what is the balance in cash book of each customer. Bank's own records is passbook and passbook or bank statement. So bank will say balance as per my records is okay, perfect. He will not, bank manager or the person who is preparing passbook will not go to each and every customer to reconcile, but the customer himself will reconcile his passbook with the cash book. So one thing, important point, theoretical aspect is bank reconciliation statement is prepared only and only by account holder, not by bank. Another thing, bank reconciliation statement is not a part of books of accounts. It is a statement and it is prepared to know the reasons for difference in balances for cash book and balances for passbook. So it is not a part of book of account. It is not compulsory to prepare bank reconciliation statement at the end of every month or at the end of stipulated time. If difference in balances for cash book and passbook arises at the end of the month or at the end of any stipulated time, then only the account holder will prepare bank reconciliation statement just to reconcile his balances for cash book and balances for passbook, so that he come to know about the exact status of how many checks are cleared, not cleared, which payments are pending to be cleared from bank. Now the reasons for difference in balances per cash book and passbook may be bank balance or bank overdraft. If it is a positive balance, it is a bank balance. If it is a negative balance, it is a bank overdraft. That is, bank account has been overdrawn as per the overdraft facility granted by bank. So there may be a difference in bank balance or bank overdraft as per cash book or passbook. The reasons are, one of the reasons that I have told you is check deposited but not cleared by bank. Another reason is check issued but not presented to bank. It means we have issued a check for payment to our creditor or for purchase of raw materials or for purchase of some asset, but the person to whom the check has been issued, he or she has not, or it has not yet deposited the check with bank. So though we have made the payment through check in cash book, we have recorded it, but it has not been cleared by in passbook or not recorded in passbook. Now, bank charges, interest on savings account or interest on overdraft is charged by bank in passbook or bank statement at the end of the month, for which account holder will come to know only when he goes to the bank and he updates his passbook or bank statement. And then after, account holder will pass entry for the bank charges, interest on savings account or interest on current account or interest on bank overdraft in his cash book when he becomes aware of the fact that interest has been charged. It means that all these entries will be passed subsequently in the next month by the account holder. So at the end of the month, there will be a difference in balance as per cash book and passbook to the extent of that bank charges, interest on savings account, interest on current account or interest on overdraft. Then certain errors may be committed by account holder in maintaining the books of accounts or by the bank in maintaining the passbook. Suppose check is deposited by Mr. B in a bank, but through oversight bank has credited it to the account of Mr. A. So obviously there will be a difference. Same way, suppose account holder is preparing 3 columnar cash book having columns of cash, bank and discount. Now check is deposited or issued. Instead of recording it in a bank column, through oversight, through error, account holder has recorded the said check either in cash column or discount column. Now the same check has been presented, cleared by the bank. So in passbook it will be reflected, but not in the cash book in bank column. That's why there will be a difference in balances per cash book and balances per passbook. So in bank reconciliation statement, all these reasons for difference are recorded. So reconciliation is not a rectification. Reconciliation is not preparing the amended cash book or amended passbook. No. Reconciliation is bank reconciliation statement is prepared only to know the reasons for difference in balances per cash book and balances per passbook. Now, I will explain you how to prepare bank reconciliation statement. First of all, start with either balance or overdraft as per cash book. Then record all the transactions which are reflected in one book but not in another book. Thereafter, ultimately you will get the balance as per other book. That is, if you have started with balance as per cash book, ultimate answer will be balance as per passbook or vice versa. Now, the golden rule to prepare the bank reconciliation statement is do what the other has done, undo what you have done. Now, as I told you previously that bank reconciliation statement is prepared only and only by account holder. So for account holder, do what the other has done, it means do what bank has done, and undo what we have done. It means whatever we have done, undo it in reconciliation statement. Be clear on this point, not in cash book, not in passbook, in reconciliation statement. I will explain you this practically, how to do. Say for example, check deposited in bank. It means we have debited in our cash book, but not credited in passbook. Undo what we have done. So in bank reconciliation statement, credit that check, as simple as that. Do what the other has done. As I told you, bank charges, interest on savings account, interest on current account, interest on bank overdraft is charged by bank at the end of the month, for which account holder comes to know when the entry is passed in passbook or bank statement in the beginning or in the middle of the next month. So while preparing bank reconciliation statement, say on 30th April, what the account holder will do in bank reconciliation statement, do what the other has done. Means bank has charged bank charges, bank has credited interest on savings account. So bank has charged, it means bank has debited passbook. So account holder will credit it. Bank has credited interest on savings account, so account holder will debit it in a bank reconciliation statement. Now, there are two methods to prepare bank reconciliation statement. One is debit credit method and another is add less or plus minus method. Any of the method you can follow. By both the methods, answer will be the same. Now, to recap the theoretical aspect which I have explained you, bank reconciliation statement is prepared by account holder. bank reconciliation statement is prepared to reconcile the balance or overdraft as per cash book and passbook on any particular date.